Bhai, we are facing right now is that today in last few days there were some challenges going on in our profession regarding payment of duties, through portals. So most of the custom brokers are actually busy in finding a solution for that.
Okay. So
So,
it's an online technical glitch.
Yeah, online technical glitch which is coming from DG systems, and they are trying to solve it. So 80-90% it is resolved, but still issues are going on. So people are a little engaged in clearing the consignments and everything.
Okay, great. So these things will happen. We as a nation are evolving as far as technology is concerned in all these public spheres. So these kind of glitches will happen, and probably 4-5 years down the line, these glitches won't be there. So do we wait for a minute or so for people to join, or can we start now?
Like we have 45, let's it cross 50, and then probably Dushyant sir can start.
Okay. So as a presenter, I can see only about 10-12 people, but there'll be more, right?
And they are over 50 now, sir.
Okay.
Dushyant sir, may I request you to give a welcome address and then hand it over to Mr. Sudhir. Sir, you're not audible. You're on mute, sir.
Yes, good afternoon, friends. Warm welcome from FFAI. Federation of Freight Forwarders Association in India is spread over 30 custom clearance locations across the country. And proudly, we can say our members are handling more than 90% of custom clear import and export transactions in the country. Besides this, we are into freight forwarding, transportation, third country export and freight movements, and so on. Custom brokers are the multipliers in field of logistics. And today, thanks to our Honorary Treasurer, Mr. Sudhir Agarwalji, he has introduced one of the prolific speakers, expert on Forex management, Mr. Ritesh Victor ji. Mr. Ritesh ji, warm welcome from entire FFAI to you.
Thank you, sir. Thank you.
Because this is one subject which our members in our recent past have not touched based on. And understanding the dynamics of Forex management would be very crucial, particularly when India is growing, logistics sector is growing leaps and bounds, and international transactions are on rise. So this is where we need our inputs, Mr. Victor. Our members want that what are the nuances of Forex management which will help them to take forward their international transactions, and we seek your help for that. So without anything, I would request all of you. Over to you, Sudhir bhai.
Thank you, Dushyant bhai, first of all, for opening up this session. And it is great pleasure today to introduce Mr. Ritesh Victor, who is an expert on Forex management. He has been in this field from last 22 years and has done phenomenal work. So today's topic for which we have chosen for our member is evolving trends in Forex management. As you are aware, we custom brokers are part of EXIM trade, and this EXIM trade, whenever we talk about EXIM trade, it is imports and exports. And whenever there is an import and export, there is payment in foreign currency, or there is an element of foreign currency involved into it. And then Forex management has become a key management in terms of growing up your business, managing your Forex, saving on the conversion rate and everything. So before we proceed, I will like to introduce Ritesh ji. Ritesh Victor is co-founder and country head of My Forex I Fintech Private Limited. and he's a Forex market veteran with more than 22 years of experience in Forex market, derivatives, and technical analysis. He has wide-ranging experience as the head of corporate Forex and treasury, Forex risk management, technical analyst, and as a research manager. Prior to my Forex, Ritesh was the chief treasury officer at Trident Group. Trident Group, as we are all aware, is a big conglomerate having, I think they are more into textiles. And Mr. Victor is the keynote speaker on Forex markets and risk management for webinars, seminars conducted by exporter industrial associations like FIO, SOCHM, TPCI, etc. As an avid student of Forex market and technical analysis of currency, he has conducted numerous Forex training programs, modules, corporate Forex risk management policies, Forex risk management presentation, and technical analysis. I welcome him to this webinar and now hand over the charge for this webinar to Mr. Ritesh. Mr. Ritesh.
Thank you. Thank you, Sudhirji, for all the kind words. Thank you, Dushanji, for introducing and getting us here. It is a real pleasure and a privilege and an honor to be here and to share certain ideas about foreign exchange, some things which we are very passionate about, just like you are passionate about your profession, your logistics and transportation ideas. We are passionate about Forex. So we'll try and share some ideas, some industry best practices, which should stimulate your thoughts and your thought processes to ensure that how, if I am exposed to Forex, what are the things that I need to look at? And by looking at it slightly in depth, deeply, how can I make a material difference to my company? Okay, so I'll quickly start with sharing the presentation. Okay. So can you see my presentation, sir?
Yes, we can.
Okay. Okay. So good afternoon and a warm welcome to each and every one of you. A welcome from Triple FAI as well as my Forex side. We were wanting to cover certain aspects of Forex management. Okay, and I will want to go through the agenda that we have for the evening. Okay, we will have 4 to 5 very critical topics. The first and the foremost important topic for you is how to manage the rates. Just before we started this presentation, I was discussing with Mr. Sudhir. He was saying that the rates that I am paying is about 2 to 3 rupees higher than what the market rate is. Okay, so 2 to 3 rupees is effectively 3 to 4%. And 3 to 4% extra cost is a massive cost in any organization. Okay, everyone is wanting to become efficient and everyone is looking at reducing cost and improving efficiency. So how do I manage Forex rates is very important criteria. Then something about there is a volatility in the exchange rate. Sometime back it was 83, now it is 82. A year back it was 75. So the exchange rate is very volatile. What are the basic tools? What are the basic risk management tools to manage Forex volatility? That is another aspect we'll cover. Third, and a very critical exporters, whoever are receiving foreign currency or whoever is paying foreign currency. So there is a tool of forwards. So how can forwards be a very effective tool in managing risk? That is what we are going to see in point number 3. We will give you certain actual historical facts which are very startling. People are not aware about it. And I'm sure that will add value to your thinking and probably some of your decision making. Fourth very important aspect is for all exporters, whenever they are looking at working capital funding. See, whenever you do exports, you get an order, but you don't get money. But you need working capital to execute that order. So what is the most efficient way of availing working capital in the current scenario for all export funding? We will look at point number 5. And then we will also look at some time about our mobile application and how our mobile application will help you in achieving the right price. The biggest challenge in India, getting the right Forex rates. Okay, and obviously towards the end of it, we will have a detailed time for question answers. So I would request any one of you who has doubts and wants to clarify, you can put it up during the question answer session. If you want to write chat box, you are most welcome to write on the chat box as well. I will open it up and we will discuss it during that session. Okay. So the first part, how do I save money on conversions? Managing Forex rates. Now, the first thing is understand what the rate is. See, whenever I say a rate, that the current rate is 82.25, for example, the spot rate is 82.25. That is what you see wherever public platform, or you are looking at a Bloomberg terminal or a Reuters terminal, you look at a rate called 82.25. It is called the spot rate, and it is called the interbank rate. These are two different names, spot or interbank rate. What does a spot mean? The spot means that it is the rate which is used for settlement 2 days later. If you want to settle a transaction today, if you have an import liability payment today, or if you are wanting to convert export receivable for today, for a credit today, you will not get the spot rate. The spot rate is for a credit or a settlement 2 working days later. So the question is, what is the rate for today? The rate for today is what we call as the cash rate, and cash rate is spot rate minus a component called cash spot, which is typically 1 paisa per day. So if it is T plus 2, then 2 days, the difference will be 2 paise or 3 paise. Okay, so understand one thing, the spot rate that I see is not a rate for today. It is a rate for settlement 2 working days later. So if I need to settle my transaction today, then there has to be an adjustment that needs to be made on the spot rate. And that is effectively the interest for those 2, 3, 4 days, depending upon T to T plus 2. Remember, all these days has to be working days. Okay, it cannot be Saturday, Sunday. So if I am standing on a Thursday, then T plus 2 Monday, T plus 1 is Friday, and T plus 2 becomes Monday. So the difference or the interest component becomes more. But typically remember, this difference or interest component is about 1 paisa per day. Okay, so spot is T plus 2, cash is today. If you do anything more than spot, let's take you're expecting a receivable in July, or you're expecting a payable in June, and you want to hedge that payable, you want to fix the rate. So you can take a contract to fix the rate. That is called a forward settlement. I will explain forwards and futures slightly later also, but understand spot is T plus 2. Any settlement beyond spot is called forward. And if I want to settle today, then it is to be called cash. Okay. Here is a small table which gives you what are the calculation points for each type of transaction. So you have a cash, you have a term, you have spot, and you have forward. Cash is the transaction which most of you does most of the time, which means that I have to pay dollars, or I have received dollars and I want to convert. So spot rate will be used, the cash spot will be used, which I just said is about 1 paise per day. So if it is 2 days, then it will be 2 paise. Okay, and there's something bank margin. So every time you do a conversion, bank will charge you a commission. Okay, understand that commission is a cost to you, so the commission needs to be fixed. Don't keep the commission variable. Typically, banks in India try to keep the commission variable, sometimes 5 paise, sometimes 10 paise. Remember, it is a cost to you, so you need to ensure that that cost is fixed and that cost is not variable. Okay, so this is a small table which you should know what are the components that are used for what kind of transactions. Okay, whether it is a cash transaction, whether it is a spot, or whether it is a forward transaction. Remember, most of the time we do a cash transaction, which means that I need to settle today. Either I need to pay today, or I need, if I have received foreign currency, I need to convert it today. Okay, for that it will be spot rate minus the cash spot. Okay, both for exporters and importers. What I want to say here by making you understand the concept of spot, cash, and term is that in India, the level of awareness on Forex rates is very low. And because the level of awareness is low, the banks tend to overcharge. Because banks have all the data, banks have all the expertise, and banks have all the information. Okay, the corporates who are facing the banks, who are counterparties of the bank, they are not fully aware. So if they are not aware, then there is a arbitrage, misinformation. Banks know more, we know less. Okay, they have the right data also. But if we improve our level of awareness and understand the concept of cash, term, spot, and all the market variables, then we can negotiate and discuss and debate. And if you are able to negotiate, take it from me, you will save a lot of your transaction costs. Very important transaction cost, as I said, is your bank margin, and you need to ensure that the bank margin is fixed, it is kept fixed, and it is not a variable cost to you. In most of the Forex transactions, what happens in India is banks will give you a net rate. Let's take you want to pay $10,000, or you have received $1, or you want to pay $5 lakh. The banks will tell you 82.18 is the net rate. You don't know what is the spot, you don't know what is the cash spot, and what is the bank margin that the bank has charged. Okay, so if you question the bank regarding the spot, the cash spot, and the bank margin, you will get the real picture. And then you will come to know what is the bank usually doing with overcharging. And take it from me, it is usually overcharged. Banks will always have the data and the information, and they will use it to their benefit. And if it is benefiting the bank, then obviously the exporters or importers or freight forwarders who are payers or receivers of foreign currency, they are at the receiving end. Okay, I just explained cash spot, and I said cash spot is reduced from the spot rate. So it is a kind of a benefit to importers. Okay, it is a benefit to importers and it is a cost to exporters. So all importers should know that there is a benefit, and if you are not aware of the benefit, the banks will not give you. If you are aware of the benefit, you can negotiate that benefit from your bank and you can get the right or accurate price. Okay, so understand one thing, even in the computation of rates, even in the understanding of rates, there are certain intrinsic dynamics that are involved. Those dynamics where if you apply your mind and understand the process and the system, you will be able to save a lot of conversion costs. Okay, keep this thing in mind. Obviously, what I'll do is I have already shared this PPT. If anyone wants the PPT, the members from the board can share it with them so that you can have a look, understand the methodology, and apply in your day-to-day matters. And I'm sure if you apply it correctly and in the right way, you will end up saving a lot of money. Okay. Now, let's go to the next part. I am doing it slightly quickly because we just have an hour and I need to devote good amount of time on the question answer. So I'm doing it slightly quickly. So let's understand what are the tools to hedge the risk. It is volatility. Okay, as I said, last year it was 75, now it is 82, it went to 80-50, 80-60, now back to 82-20. So there is a decent amount of volatility. So how do I manage this volatility? What are the tools that are available to manage this volatility? Okay, the two most basic tool is what we call as forwards and futures. Okay, they are very similar, but there are certain differences. It is an agreement to buy or sell a currency at a rate that is specified today for a future date. Okay, so you are fixing the rate for a future date, and you are fixing the rate today itself for a delivery in the future. So if you have fixed the rate, then there is no risk. Then there is no risk. Whether the market goes up or down, there is no risk. Okay, so such a contract is called a forward contract. If you do it with a bank, then it is called a forward. A similar contract, if you do it with the exchange, BSc, MSc, if you do it with them, then it is called a future. It is a very similar to forward. The major difference is forwards are done with banks, futures are done with exchanges. Okay, forwards are customized, futures are standardized. Okay, in forward, there is lack of transparency of rates because you don't know what is the spot, what is the forward premium, what is the bank margin until unless you have fixed the bank margin. Okay, so the rates are not very clear in forwards, but in futures, if you do it with the exchange, the rates are very clear. You know very clearly what cost, what is the STT, everything is very clear. Okay, so forwards and futures are the most simple way of managing forex risk. You just freeze the rate for a future delivery. It can be 1 month, 2 months, 3 months. You can do it for the next 5 years. 5 years is obviously a very long time. Typically, companies do it from anything from 10-15 days to a maximum of 1 month. Okay, so forwards and futures are the most simplest form of risk management instruments. Okay, now the next level of instruments is what we call as options and swaps. These are slightly more complex. An option gives you a right. Okay, just like forward is an obligation. Once you have fixed the rate, you cannot change the rate. You are bound by it. Okay, so forwards and futures are obligatory contracts. Once you have done it, you have to honor it. But in an option, instead of an obligation, you have a right. You have a right to use the contract. And at the same time, you have a right to not use the contract. So obviously, you will use the contract when the contract is favorable. You will not use the contract if the market is favorable. Okay, so for such a right, you have to pay a premium. Okay, remember, forwards and futures are free. You do not pay a cost for taking a forward or a future. But if you are taking an option, then you have to pay a price, and that price is called an option premium. Okay, if you want a right to buy the foreign currency, then it is called a call option. If you want a right to sell the foreign currency, then it is called a put option. Okay, so these are also getting very popular in India. Forwards and futures are already very popular, but nowadays in the last 4 or 5 years, we have seen options becoming extremely popular in managing risk because it gives you the freedom and the flexibility. But that freedom and flexibility comes with a cost. So we have to analyze the cost benefit analysis or the risk return analysis, that this is the cost, X is the cost that I have paid, and what is the benefit that I can get by paying that X cost. Okay, that is what an option is. Now, a swap is a third level of a contract, which is quite relatively quite complex. It is an agreement to exchange a sequence of cash flows. So, for example, I have euro receivables, but I have dollar payables. Then I can enter into a contract to match my euro receivables with the dollar payables. Okay, so these swaps can be done for currencies, and these swaps can be done for interest rates as well. Okay, so there are interest rate swaps, then there are currency swaps. So these are typically long-term hedging instruments, 2-year, 3-year, 5-year long-term hedging instruments. Forwards, futures, and options are typically used for short to medium term, and swaps are usually used for medium term to really long-term periods. Okay, so swaps can be used to hedge interest rate risk. The risk of can also be used to hedge currency risk, the risk of currency going up and down. Okay, so remember predominantly 3 categories of risk management instruments. The first, what we call as forwards and futures, where you just fix the rate. The second, what we call as options, where you get a flexibility of fixing the rate, but for that flexibility premium, there is a cost to it. Just to give you an idea, the entire concept of insurance comes from options. Okay, you buy an insurance, right? You buy fire insurance, you buy life insurance, you buy health insurance. So to buy that insurance, you have to pay a premium. Okay, and the premium is what covers the cost. If there is a fire, then you can claim. Okay, similarly, here options, you pay a premium and you completely eliminate that risk. So it is a very effective risk management tool. So the second category, as I said, is the option. The third category is swaps, which is usually done for long term, and you can hedge interest rate risk as well as currency risk by doing a swap. Okay. So now this is something really interesting. In the last 2 points, I've covered 2 aspects. I want to cover 2 more, at least 2 to 3 more. And these are very important aspects. And these are insights. Till now, I am just giving you information. So as of now, the 20-25 minutes, what I've told you was primarily information. This you can get anywhere in the world. You can go to YouTube, you can get a million videos explaining what I just explained. Okay. But the next 30 minutes, I want to invest in something more insightful. This is something more research-based and fact-based. So this is not some opinion or something, but these are facts. And this is a fact that I receive from a lot of industry association, a lot of exporter bodies, importer bodies. They tell me that, Mr. Victor, the dollar is always on an uptrend. Okay, 5 years back it was 60, 3 years back it was 65, last year it was 75, now it is 82. Okay, so the dollar is always on an uptrend. So if it is on an uptrend, then exporters should never hedge and importers should always hedge. Because if it is an uptrend, the future price is going to be more than the current price. So if the future price is more, the exporters are going to get more, right? And importers have to pay more. So the general idea is within exporter and importer community is that since the dollar is always going higher, the exporter should not hedge and the importer should hedge. Okay. Now, actually, the reality is very different. And I want to show you with historical facts and figures that actually the market is not concluding what we just discussed. Okay, so I will just give you a small example of what we have done, and that will give you the complete picture. So the 3 questions that we ask, counter questions that we ask is, does the rupee always weaken? Does the dollar INR always go higher? If you see, predominantly it has gone higher, but there are periods of rupee gains also. Okay, so that is one cross question. The second very important cross question is, whenever you do a forward or a future, you get premiums, you get forward premiums. So have we accounted for the forward premiums? That also we have to introspect. Are we looking at the complete picture? That is the biggest question. So I will just explain what we did. Okay, it's a very simple analysis that we did, but the result was startling and the result was really a decent amount of insight. Okay, what we did was we did a historical research. We started from the 1st of Jan 2000, and on each working day, I took 3 forwards. I took a 3-month forward, I took a 6 months forward, I took a 12-month forward. Each working day. Okay, so each working day I took 3 months forward, 6 months forward, and 12 months forward. Okay, so at the end of these forward dates, I was just comparing what is the forward rate with the spot rate on that date. Right? So if I have done a forward rate, if I would not have done anything, then I would have got the spot rate on that maturity date. Okay, so I simply compare the difference between those, whether I have gained by doing a forward or whether I have lost by doing a forward. Okay, so this is the comparison and this is the result that I wanted to show you. But before I actually show you the result, let us introspect a bit more on actually what we have done. Okay. So what have we done? We have taken a forward for 3 months, 6 months, and 12 months. And we have done it for every day for the last 22, 23 years. So it's going to be a lot of data points because every year there are about 220 days. And if you do it for 22 years, then the total number of days will be in excess of 5,000. So 5,000, 6,000 data points for 3 months, 6 months, and 12 months each. Okay. So when you're doing a forward, you're getting a premium. If you do a 3-month forward, you get 3-month premium. If you do a 6 months forward, you get a 6 months premium. If you do 12-month forward, you get a 12-month premium. Okay. So what you are receiving by doing a forward is a premium. Okay. And if you are not doing anything, what are you getting? You are getting the natural depreciation of the rupee. The rupee has depreciated in the last 20-22 years. So if you do nothing, then you get the natural depreciation. Wherever rupee is moving to a rate on your maturity date, you are getting that rate. Okay. So it is actually a comparison between the forward premiums that you have received vis-a-vis the natural depreciation of the rupee. Okay. These two are the variables that I need to compare. Okay. Now let us see the result, and take it from me, the result is very surprising. Okay. Now let me explain what has happened here. I have just prepared a small table to give you that result. Okay. Let me just explain what the result is. See, for 3 months, 6 months, and 12 months, there are 3 cases. Sorry, there are 3 cases. So for 3 months, let's look at 3 months first. In the last 22 to 23 years, the average forward premium that you have received is around 4.4%. Okay. The average forward premium that you have received is around 4.4%. This is what you have received by doing a forward. An exporter receives the premium, an importer pays the premium. So premium has been on an average in the last 23 years for 3 months has been around 4.4%. What has been the actual weakening of the rupee? The actual weakening of the rupee has only been 3%, which is 2.99 per annum, which means 4.4 minus 3, 1.4 is a straightaway gain on a long-term basis by consistently doing forwards. Similarly, it is 6 months and 12 months. If you see closely, the premiums have been between 4 to 4.4%, and the actual rupee weakening has been between 2.9 to 3%, which means anything between 1%, 1.1% to 1.4% is the gain that the exporter gets if you do forwards on a consistent, regular basis. Okay. What does successful trade mean? Successful trade means that if I would have done a forward and the forward is better than, higher than the spot at maturity, then it is a successful trade. So how many times I have been successful? I have been successful anything between 62 to 64% of the time. So if an exporter regularly is hedging his Forex receivable consistently for the last 22, 23 years, he is gaining anything between 1.1 to 1.4% per annum on an average. Okay. Obviously, some years he will gain and some years he will lose, but on a consistent average long-term basis, he has gained more than 1% per annum. Okay, so this is a very contradictory finding, compared to the general ground reality. Generally, the people feel that the currency always depreciates, but the real reality is even though the currency depreciates, the forward premiums have been more than the natural depreciation. This is for the last 22 years. If you look at the last 10 years data, the last 10 years is far more interesting. The last 10 years, this difference of 1.1 to 1.4% has reduced to 0.6 to 0.8%, which means the market is already correcting some kind of a structural deficiency which it was witnessing in the previous 10 years. Okay, so the market is already adjusting to the fact that the premiums cannot be more than the normal natural weakening of the currency. Okay, so a very strong conclusion here for all exporters and importers are exporters should regularly hedge, because by hedging you get more forward premium and the natural weakening is far less. Corollary is for the importers, they should not really hedge, they should keep a lower hedge ratio. This is what the market says, but bottom line is, all you exporters and importers, whatever risk management policy you have, these are good ideas to rethink on your risk management practices and evolve it further, discuss, debate, ideate, and make it more refined and more closer to the industry best practices. Okay, so this is something which all of you should very closely look at, whether on a long-term basis, if an exporter or an importer would have hedged, would that make a positive difference to your overall profitability, or does it make a negative difference to the overall profitability? Okay, now let me come to the another very insightful part of it. Obviously, the forward was again a very insightful part. Again, I'm sure a lot of you wouldn't have thought about it, that actually the reality is very different from what the general perception is. So now let us look at another aspect of bringing efficiency into your system. Okay, now this is about working capital funding. All exporters, you need working capital. Okay, importers also need working capital, but that is a different subject matter. Here we are talking about export funding, and I am trying to tell you a methodology where if you want to fund your exports at the current time, you can get funding of exports for as low as 3 to 4%. Okay, so does working capital funding at 3 to 4% excite you? I'm sure it will. I'm sure it will. The repo itself is around 6.5 to 6.75. Okay, so if the repo is around 6.5 to 6.75, how can my interest cost be lower than the repo? How can it be 3 to 4%? So I'm just trying to tell you about a magical methodology. Okay, now for export funding there are two ways to do it. Okay, there's something called a packing credit. For all exporters are eligible for packing credit. It is actually funding of exports. So packing credit can be taken in two ways. You can either take it in foreign currency or you can take it in INR. Either way, let us evaluate that if I take it in INR or if I take it in foreign currency, what is my net interest cost? And in what way can I reduce it to as low as 3 to 4%? Okay. So if you take packing credit in foreign currency, since it is a dollar loan, you will have dollar interest rates. And now dollar interest rates are also very high. The short-term funding rate, overnight funding rate is close to 5%. Okay, and you have 1.5 to 2% of bank spread. The total PCFC cost will come to around 6.5 to 7%. Okay, so this is very close to my repo. So if you do a foreign currency funding, this will come to around 6.5 to 4%, 7%. Okay. Now, what happens if I do a packing credit in INR? Now, very interestingly, for all packing credit, if you take in INR, the government of India gives you a subvention benefit. There is a subvention benefit of 3% for MSMEs and 2% for non-MSMEs. Okay, so if you are an eligible exporter and you are a bigger company, you are larger than an MSME, then you get a 2% subvention. But if you are an exporter MSME, if you are an exporter MSME, then irrespective of your HS code, you are eligible for 3% subvention. Okay. Now, if you are eligible for 3% subvention and 2% subvention, my interest cost straight away gets reduced. Okay. For a normal MSME, the current PC rate is around 8.5 to 9%. Okay. So 8.5 minus 3 is 6.5. Okay. Now, similarly, for non-MSME, it is 7.5 or 8. So 8 minus 2 is 6. So with subvention, I am coming at par with my PCFC cost. But what is the real intelligence and the real insight? How can you reduce it further? Now, there is a very great methodology of reducing it further. How can you do it? You know, how does the structure work of a packing credit? You take packing credit in INR. Let's take, I take 10 crore loan today for my working capital requirements for an export order. Okay. So if I take 10 crore INR, I have to repay this 10 crore by converting foreign exchange that I'm going to receive by honoring that export. Okay. Once I complete that export, I will receive foreign currency. I will convert that foreign currency and then pay this packing credit of 10 crores. So for that future conversion that I'm going to do, which might be 3 months, 6 months, or 9 months later, for that future conversion, you can take a forward contract. And if you take a forward contract, the current dollar INR premiums are about 2 to 2.5%. So your rate reduces by 2 to 2.5%. Okay, so what was 6 becomes 4 or less than 4. Okay, so understand this methodology. I will explain with a simple flow chart how it happens. Okay, it's a very simple flow chart, but this is something which all of you exporters and importers, not importers for there's a different funding methodology, but all of you exporters should certainly look at exploring this. Now, it's a simple flow chart. How does it work? In INR for 180 days. Okay. Now that 10 crore I am going to repay from the dollar receivable that I'm going to get after 180 days. I got the order now. I will get the inflow after 180 days. So whatever inflow I get, I will get it converted. And then by that conversion, I will repay the PC. Okay. So 10 crore in current value is around 1.22 million. Okay, so what you can simply do is you can do a forward for 1.22 million for 180 days. And when you do a forward, you get a forward premium of anything between 2 to 2.5% per annum. So 2 to 2.5% per annum forward premium you will get if you do a forward. And then on maturity, when you get that receivable of 1.22 million, you just use this forward to convert into INR and repay the INR. So in this way, I get the 3% subvention benefit. I get a 2.2, 2.3% benefit of the forward premium. So the total benefit that I get is in excess of 5%. So my interest cost, which was 9, is now below 4. Okay. This all exporters should look to explore, and this is a magical methodology of reducing your export funding cost. And take it from me, whoever understands Forex well in this country, everyone is doing this and following this. Each and every intelligent soul in India who are eligible for subvention, they are doing this way and enjoying an interest cost reduction to as low as 3 to 4%. Okay, so the general thumb rule that we propagate to everyone is that benefit is available, take packing credit in INR, and if subvention benefit is not available, then you can look at taking packing credit in foreign currency. Okay, but the bottom line is every time you take a packing credit decision, you need to look at both the options and you need to look at whichever is cheaper on my exports. Okay. Now, just I will invest 4-5 minutes to give you an idea about our mobile application and how we have used technology, how my Forexi has used technology to overcome Forex challenges in India. And the biggest Forex challenge in India is the Forex rates. No one is aware about the correct Forex interbank rates. So what we have done is this, we have an application called My Forexi. It is there in both Android as well as on iOS. You can download this app. This is free. This is free of cost and you get real-time prices. At any point of time, if you see the app, you will get real-time prices. You can use this rates to negotiate for all conversions with your bank. The rates are very, very close to the actual real-time prices. So by using our app intelligently, the biggest challenge of India, which is the rates challenge, getting accurate prices, getting correct rates, the biggest challenge in India is overcome very efficiently. Okay. Now, if you want to hedge for using forwards, it gives you the forward rates also. Not only it gives you real-time spot rates, it will also give you the real-time forward rates. So if you just tap on any currency pair, it will open up a calendar for the next 1 year and it will give you the forward rates for each day for the next 1 year. Okay, so you get real-time spot rates, you get real-time forward rates as well. Okay, so it is a must-use application for anyone who is in Forex business. Another very interesting feature that we have built up in this is a rate alert function. Now, typically what happens is, I'll tell you a normal market phenomena. Let's take the rate is 82.10 now. And an exporter says, okay, I want to convert if it is 82.20. I want 10 paisa higher than the current rate. But if you want that kind of a rate, you will have to keep looking at the screen throughout the day. So that as soon as 82.20 comes, I will convert. Okay, so that ends up wasting a lot of your time. You have to keep looking at this rate. You have to remain glued to the rate. And no one has that much of time these days. So what we have done is we have created a rate alert function. You can create an alert. So if you want to, want to convert at 82.20, you can put a rate alert on the application. And as soon as 82.20 is touched, it will send you a notification. Okay, so the system is super smart and efficient, and it will track the market for you and alert the market to you as soon as target price is met. So in this way, you do not have to keep looking at the screen continuously. You can put an alert and get back to your work. As soon as the market reaches your target, the application will send you a rate alert. And as soon as you get the alert, you can take your decision. Okay, so rate alert is a very good function. There are Forex trading ideas also. Whoever wants to trade, Forex trading has become very large and a very big business component in India. It has, grown 6-7 times in the last 5 years, which means if rupees 100 was, sorry, if rupees 100 was getting traded last year, it is 600 rupees which is getting traded. So the size has enormously increased in Forex trading in India. So anyone who is interested in Forex trading can look at our application. and get Forex trading ideas as well. Okay. So if you need Forex for personal needs, you can use our app and you can buy or sell currencies for your personal needs as well. We are duly RBI authorized money changer. You can use our app to satisfy your personal needs as well. Okay, so I have quickly wrapped up and I have 10 minutes and I'll address all your questions one by one. Sudhirji, let me start with the questions on the chat box. Okay, then I will take oral or verbal questions.
Okay, sir, go ahead. I think the first question I can see on a chat box is why can't we can have a standard rate like of say 3 months or 6 months?
Okay, standard rate mean, sir, how will the rates be standard? Because it's a very dynamic market, the spot will keep changing, right? So if the spot changes, then everything else will also change, right? It's not a static market, right?
So only thing we can say that the exchange rate differs from day to day basis. So there is not a constant factor since it depends upon the on the spot rate of that particular day. On that basis, any forward rates can be worked out with premium. So it cannot be a standardized rate every day. On the basis of spot rate and premium, you are getting a fixed forward rate for a particular date. That you can fix on every day, but that depends on the spot rate of that particular day.
Right, correct. And remember one more thing, Subirji and all the participants, there are millions of factors which impact the spot rate. Okay, so spot rates can never be static. It has to be dynamic.
Okay. Okay, sir. The second question is there, do the bank charges for forward contract differ from bank to bank? Also, the bank charges may even out the gains.
Okay, good question. See, the forward premiums are the same across different banks. Okay, if I say that the 1 month premium is 18 paisa, or if I say the 2 month premium is 35 paisa, then it is the same across all banks. What differs is the bank margin that they charge you. Okay, the bank might charge you 4 paisa margin or 5 paisa margin or 10 paisa margin. So your rate increases by 4, 5, 10 paisa. Okay, but the forward premiums at any one point of time is the same across all banks, irrespective of whether it is SDFC, SBI, PNB, whichever it is. Okay, so the premiums are same across different banks. The only thing that differs is the charges that the bank charges you on the final conversion.
So the next question is, what is the source of database for rates published on My Forex application?
I'll tell you, sir. Okay, sir, there are various data providers. If you would have asked me this question about 7, 8 years back, there were only 2 or 3 data providers. Okay, nowadays the data providers are 10 or 12. Okay, and take it from me, the data from where we take it from 2 providers. We don't take it from one. Okay, we take it from 2 data providers, and they are data providers to banks also.
Okay.
Okay, which means the rate that I am showing it on my application is going to be very, very close to the rate at which the banks are trading. The difference in 90% of the cases will be 0 paisa. In some 4-5% of the cases, the difference will be quarter paisa. Quarter paisa is 0.0025 paisa.
Okay.
Okay. So take it from me, we are taking from very authentic sources. We are taking from 2 sources, and both these sources are providing data to banks. Okay. So in 90-95% of the cases, it will be very, very close to the actual real-time price. And you can use it to negotiate rates with your banks as well. If you're having challenges in negotiation, you can reach out to me. I am always there to help.
So there is one more question now. The foreign currency rates are therefore dependent on rupee dollar parity. Is there any regulatory authority to monitor this?
So the biggest regulatory
RBI.
authority is the RBI. Okay, the Reserve Bank of India is the biggest regulatory authority. But remember, RBI is predominantly on a monetary and regulatory authority. They will not interfere in day-to-day functions. They will create guidelines, they will create regulations, they will come up with compliance requirements. Okay, those things they will do. Okay, but day-to-day monitoring, it happens sometimes. If there is a lot of volatility, then they come and take actions to reduce volatility. Those things happen. But the Reserve Bank of India is the foremost and the primemost regulatory and monetary authority for management of the forex system in India.
Okay, now I have got like 2 or 3 very practical questions. One of them is that since you were telling that whatever premium we pay to our banks for getting the desired foreign exchange depends upon how banks are charging us. So what should be a good negotiation with a particular bank? Like I can give you my example very clearly. When we are doing with HDFC Bank and we enjoy a very good relationship with them. So most of our transaction when we are paying to shipping line in foreign exchange, they are charging us 500 rupees per transaction. Like irrespective of quantum of dollars we are transferring, they are just charging us 500 rupees and markup of 2 paisa, which is normally I have seen 4 paisa. It is never 2 paisa because they call us up at a particular time, say by 3:15, they will call up us and they will give me a reference rate ki what is the exchange right now which is going on. And I have got access to xe.com where I see that exchange rate, and usually it is 3-4 paisa higher than what is the prevailing rate. So at that rate, they close the transaction and they then they charge me 500 rupees per transaction. So is it a good bank charges, or we can do a better negotiation? How can you guide our custom broker fraternity so that they can negotiate with their respective banks for a better, bank charges?
Okay. Sudhir ji, first and foremost, if they are saying 2 paise, 4 paise, we need to ensure that it is actually 2 paise. Just now you said the banks have given a 2 paise authority, but they are actually charging 4 paise. Okay, that 2 to 3 paise, there is always a slippage. Okay, that can be taken care of by using the application. Okay, first thing. Second thing, that can be taken care of by negotiating with the bank. You can ask bank certain questions, what I explained in the beginning of the presentation, something called the spot. Okay, you can ask them, sir, what is the cash spot you are giving me? Okay, what is the bank margin? What is the spot rate that you are taking? See, it is a calculation. It is not one rate. It is a calculation. It is a calculative method. Spot minus cash spot plus forward plus the bank margin. If it is a exporter importer, whichever way, exporter में minus bank margin हो जाएगा, importer में plus bank margin हो जाएगा. Okay, so what you need to ask from the bank is these 3-4 questions. What is the spot rate you are taking? That you can cross check with our application. You can even check in XC. XC is a relatively decent standpoint, but it is not real time. Okay, it is quite close to real time, but it is not real time. So you can ask what is the spot. You should ask what is the cash spot, and you should ask what is the bank margin. If you ask these 3 elements, then you can automatically derive the net rate.
Okay, so but all these kind of working you don't have to do with the bank on day-to-day basis. Normally, these things have to be in principally agreed upon with the bank, and once that agreement comes into place, the bank will quote you accordingly.
Actually, what happens is, sir, it is principally agreed. But once when you get into the nitty-gritties, there is always a difference of 2, 3, 4, 5 paisa. Okay, so now we have to just see whether that 2, 3 paisa is material or not.
Okay.
If you do a 1 million transaction, then 2 paisa is a very big amount.
Okay.
But if you do a $1,000 transaction, then 2 paisa is a very small amount.
Correct.
So what you need to look at is for all your reasonably good volumes of conversion, you should always question the bank. What is the spot? What is the cash spot? And what is the margin?
And what about the fixed fee which they are taking per transaction, 500 rupees, which this is fair?
Sir, 500, are they taking as forward contract charges or what are they taking as?
No, they are matlab for facilitating your foreign exchange payment, they are charging you 500 rupees per transaction.
And this is in addition to the bank margin that you are giving.
So bank margin is not known to us. It is only a exchange rate which the bank is giving to convert your rupee into dollar. So whatever margin they are having, 1 paise, 2 paise, 4 paise, which they don't disclose what kind of a margin. They just state us that they are keeping 2 paise margin, but that can be 4 or 5. So beside that, they are charging 500 rupees per transaction.
Okay. Now what you can do, Sudhirji, is first thing, whatever is your bank margin, that has to be written and communicated to you.
Okay.
Okay, that you need to discuss with your bank, that if it is a charge, then the charge must be in black and white. The charge cannot be oral in nature, right? Okay, so this is one thing you need to get. Second thing is, you need to ask the bank that if I am already giving a bank margin they will 100% take. They cannot forego a bank margin. Okay? What you can negotiate with them is, if I am giving a bank margin of whatever 2, 3, 4 paisa, then what is this 500 rupee extra charge?
Okay.
Okay. See, all charges needs to be justified.
Okay.
Right. So
Yeah.
if bank margin is justified, okay, fine. It is a justified cost. At least pen it down. Write it, give it to me in writing. Okay, because if it is a charge, it cannot be verbal or oral in nature. No, it has to be in black and white.
Okay, I got your point. I think I will convey. I think most of the participants must have understood it, or personally, I will explain them what we are discussing right now. Then there is another query from a fellow colleague of mine, wherein they are asking, like, what is the relevance of EFC account? Like most of us will like to use this EFC accounts for our dollar receivables and obligations. So
Yes,
how effectively we can use this EFC accounts, and what are the regulatory provisions for it? Because recently I was told, like, as I told you, in our business, we are collecting freight payments from our exporters and we are paying to the shipping lines. So, and if the exporter is having his office or is based in India, and my office is also based in India, so if I am raising a dollar invoice on him and he is making a payment in my EFC account, whether that is a justified transaction, or does it attract any regulatory contravention? So I just want to understand the relevance of EFC account now, sir.
Okay, great. It's a very valid question, and it is an account which is extensively used by exporters and importers in India. Okay. Now, sir, an EEFC account is an exchange earners foreign currency account. Okay. Just like you have a INR account, current account, an exchange earner or an exporter has a foreign currency account, which is called EEFC. Okay, you can open the account by just simply filling up a form with your bank. EFC is used in majority of the cases to match exports and imports. Okay, for example, that I have an export where I have received $1 million today. Okay, but I also have an export where I have to pay $8 lakh 2 days later. Okay, so what I can do is, when I received that $1 million, I can park it in this dollar account and use $8 lakh to pay after 2 days. Okay, so it is a simple account where you receive foreign currency and you can use it to pay foreign currency also. Okay, so the biggest benefit are two. First, you save transaction cost on 2 transactions. You are not converted. Yes, export में भी convert नहीं किया, import में भी नहीं convert किया.
Correct.
Both places you save transaction costs. Okay. The second thing very important is, you have eliminated currency risk for this period. your receivable has come before, your payable has come 3-4 days later. So the risk of volatility of these 3-4 days you have eliminated. Okay. This is the basic operation of EFC. The most critical guideline for EFC is, the balances of the EFC account, the credit balances of the EFC account cannot be kept for a very long period of time. Any credit balance has to be converted maximum by the next month end, next month, calendar month end, which means if I receive $1 million today, okay, and I have, let's take $5 lakh payment after 3 days and $2 lakh after 10 days. So I have paid 5 and 2. So balance 3 lakh is left in my account. Okay. So if that has come on 12th of April, I cannot keep it in the EFC account beyond 31st May. Okay. So any EFC credit balances have to be mandatorily converted by the next month end. This is the foremost regulation of EFC. Otherwise, it is a very simple account. It can be opened with your bank by simply filling an application form, an EFC application form. You can receive money and park it in that account, okay, and you can use it to make your import payments.
So, sir, as far as import and export is concerned, I'm very clear about the mode of operating EFC account, because your remittances are coming out from out of India and you are sending money somebody to who is based out of India. But
Right.
in our shipping line freight payment account, these EFC accounts are used first to collect the freight payment in foreign currency from the exporters, and then using that foreign currency to pay to the shipping lines. Now, but the only thing is that shipping line, at least the agent who is collecting this money is representing a foreign shipping line. But the exporter from whom we are collecting this money or raising our invoice in foreign currency, they are based in India. So is there any any challenges if we collect any payment in terms of foreign exchange from an entity based in India?
See, sir, first thing, if it is an exporter who is using your logistic services, okay, so the exporter is an Indian exporter, right?
Yes.
And you are also an Indian company.
Correct.
Okay. So how is an exporter paying an Indian company in foreign currency?
See, that is the challenge we are facing, because if we pay to the shipping lines in rupees, their exchange rate is on a much higher side. So what we want to do is that we want to pay these shipping lines in dollar, and we want to receive the payment from exporters also in dollar.
Okay, so there I think there will be a decent amount of regulatory challenge. Okay, because I don't think an exporter in India who is an Indian exporter will be able to pay an Indian logistic company in foreign currency.
Okay.
I don't think a domestic transaction can be settled in foreign currency.
But that is happening, sir. In most of the cases, I have seen some big forwarders based in Bombay, they are raising invoices in dollar. They are giving both the breakups, dollar and rupee, also on the same invoice, and the exporter is making them the payment in foreign currency. But the account is EFC account, and the address is Indian, and both the parties are based in India.
Okay, so which means they are taking a credit in the EFC account, but that amount is coming from an Indian exporter.
Correct. And this is happening on a regular basis, but somebody told me that it is not the correct way. Maybe in times to come, RBI might raise an objection. So this is one idea I want to explore, because we are not expert in foreign exchange transactions. So if it contravenes any law, maybe, if not now, maybe in future there will be regulatory punishments on us.
Yeah, I can understand. One thing I can assure you, Sudhirji, if a bank is doing it, okay, if a bank is doing it, then it is certainly within the law. The bank will not go beyond the law on this. Okay, so if the bank is doing it, that means there must be certain facilities and provisions in the system, and they are just following that provision and facilities of the system. It is very unlikely that the bank will be doing any kind of an illegal activity as far as foreign exchange is concerned.
Certain banks, they are objecting to such kind of a transactions, and some certain banks, they are doing it, sir. That is the challenge we are facing.
See, I'll tell you, Sudhirji, a very simple solution is, if a bank is doing it, okay, we just need to be aware of what regulatory system is following.
Mhm.
And if some other bank is objecting, then he is objecting on what grounds? Because if one bank is able to do it, then I'm sure it is legal. I can assure you, for the benefit of any company, a bank will not risk its license.
I'm getting your point. Only thing I will request you, Mr. Ritesh, is that since you are an expert on it, try to explore this issue or idea, and what can be the right proposition, so that we can tell our members ki this is the right way, because we don't have anything in writing where the law is defined very clearly or the provision is defined very clearly, so that we are rest assured if we are doing any such kind of a transaction, it will not harm our interest in future. And we will be more than happy to operate our businesses through EFC account, because some of our big customers, everybody like into logistics industry, now that multinational companies have come into it, so people have started preferring paying in foreign currency, because that way they save on that exchange rate differences. So even the exporter is more than willing to pay you in foreign exchange, and we as an forwarder also is more than ready to pay to our shipping line in foreign exchange. So this mechanism has to be worked out. So kindly look into it. Maybe in times to come, we can take your advisory on it. And whatever today topics we have covered in our webinar, we will take points from our members, like based on whatever you have taught us or informed us, what are the special needs of our trade in terms of maybe the contracts, the strategy of Forex management, the risk in managing the foreign exchange management. All these points we will compile, and maybe sometime later we can have a specific webinar on it, wherein you can address all these points.
Sure, sir, sure. What you can do, Sudhirji, is for the specific question that you had, you can send me a mail. I'll try and look for a solution for that. Okay. And regarding the second aspect, where we can have another webinar kind of a thing to address specific questions, I will be more than happy to address it. So you can schedule that, and probably we can come out for 45 minutes, 1 hour, and address specific questions from the members.
Okay, Riteshji, now few of my office bearer colleagues are there. If they have any specific question for you, they can ask, and otherwise we will close this session I will request Vinodji, if some questions are there, first we will take up those questions, and then we will hand over the webinar to our Honorable Secretary, Mr. Vinod Sharma.
Ramaji, do you have any questions, Rama sir and Vipin sir?
Yeah, I have two questions.
Yeah.
Riteshji, whatever you have said is very correct, but the only thing is there is a lot of difference between an exporter and a service provider, freight forwarding agency. If we go to the bank asking for packing credit, we do not have order, we do not have letter of credit. Is it possible to get the packing credit without even these documents? Because what we have is the freight, airway bill or bill to the customer. That's all we have. Now we are not sure whether this month, if we have got business of $200,000 incoming, next month whether I'll get 300,000 or not even 50,000, because it's not predictable what business will I get next month, because it's every day. The shipment comes and we raise invoice to the foreign agent. Now nobody gives us projection of what they are going to give after 2 months or 3 months. So like exporter, they have got order, they have got letter of credit, they get the packing credit. So how and freight forwarder can get a packing credit. Now the other thing is working capital. Now even in working capital, exporter has got everything in front of with him. Now as a freight forwarder, how we can get the working capital also without any documents except our past performance with the bank, that this much in the last 1 year, every month we have received, $200,000 this month, $500,000 with this month, only the past performance. Now it is very difficult to predict the future. Maybe it goes to $1 million, or maybe it comes down to $200,000. So that's another thing. Now the third main question is it possible to get, the what do you call, overdrafting with the bank on LIBOR terms as a freight forwarder, not as an exporter, because we are not exporter, we are not exporting anything. As a freight forwarder, we do not manufacture anything, we just provide services. So is it how it is possible to get interest, LIBOR terms interest on our business? These are the three questions.
Okay, sir, just tell me one thing. The first question, let me answer one by one. Okay. As a service provider, how do you receive foreign currency? What is the methodology?
See, we get routing from our overseas partner that this is the shipment you have to handle. We handle the shipment, we bill to the foreign agent, he sends us money in foreign currency.
And what is the normal cycle? How long does this take?
Like January billing, we'll get payment by February end.
So it's like 30, 45 days.
Yeah, 30 to 60 days.
30 to 60 days. So which means that you need funding for 30 to 60 days.
Yes.
Okay. Now tell me one thing, sir. Whenever, let's take, I am standing on day one. Okay. So what is the document that I have which says that I will receive, let's say, $500,000 after 2 months? What is the document?
I have an agreement with the agent that he'll, whatever business I do with him, I'll get payment in 30 days or 60 days or 45 days.
Okay. Have you approached your bank for working capital funding depending upon that agreement?
See, we have, but then, they want the projection. Now, sitting today, I cannot give him projection how much business I'll do after 6 months or 8 months or 3 months. Because it's all uncertain. This month, maybe I get 100 tons from him. Next month, I may get only 10 tons from him. So it's very difficult to predict.
See, sir, keep aside the projection. Projection is a separate point of discussion. I want to know that if you have an agreement, let's say you have an agreement that you will get $200,000 or $500,000 after 2 months. Once you have that agreement, based on that agreement, you can get working capital funding from your bank, right?
So mainly what you're saying is we'll get funding only for 30 days. Because
so you will get funding for your trade cycle. Whether it is 30 or 60 or 90, that depends on the industry, that depends on the product, that depends on the service. Okay. So your funding will come for your specific trade cycle, whatever the trade cycle is.
Okay.
Okay. I think, sir, you should explore this. I think this can be worked out. I'm sure it is not a general case. It's not a general case of.
What happened was we did try with Standard Chartered Bank. We did succeeded in that. But what happens is now we took we gave like $100,000 which ex-agent owes us. Now we also owe that agent $20,000. They financed me for $100,000, but actually I received $70,000 from them. And then the exchange thing came up. What rate they will charge for 30,000?
Okay.
But they did the contra. The agent did the contra.
Okay, but you have an agreement for 200,000, so it cannot be more than 200, less than 200. Right? It will be $200,000 only, right?
No, I've got unlimited. It's up to me how much credit I want to give to the agent. It can be 100,000. It can be 10,000. It depends on the agent, with whom I'm working.
But I think, sir, to be very honest, in my opinion, you can get. You just need to get the right persons in the bank. You need to do a credit assessment, and depending on that, on your industry, you can get it.
That's fine. And what about the LIBOR terms? Can we get credit on the LIBOR terms rather than paying 9% to the bank?
See, sir, as of now, if you need a cheaper funding, with interest subvention, the cheaper funding is INR funding. LIBOR funding is expensive now because LIBOR rates, it's not LIBOR anymore. It is called SOFR, short-term overnight financing rate. So LIBOR is not there anymore. Okay,
Okay.
so SOFR is very high now. So a foreign currency funding is going to be very expensive.
Right.
Cheaper funding will be INR with subvention.
Right. Now, the last question is the packing credit, what you said, can it be given on our past performance?
No, packing credit will come on a contracted agreement that you are liable to receive X amount of foreign currency in the future.
Okay.
It cannot be on past performance. It can be on current actual documents and agreement. For exporters, they get it on basis of export orders. For you, I think you can get it on the basis of your agreement, which specifically states that you will receive foreign currency.
But then what about the forward bookings? The forward bookings, how can you do as a freight forwarder, when you do not have an order or anything?
See, sir, whenever you have an agreement, okay, you just said now you have an agreement that you will receive X amount of foreign currency in the future. On the basis of that agreement, you can take a forward.
No, I tell you, here, I had a word with Standard Charter. They are giving me, they are booking on my, forwards on my past performance. That
So
if my average is, 500,000, $500,000 every month I receive foreign exchange. So they are giving me, forwards I can book up to $500,000 every month, as forward, looking at my past performance. Because I do not have, projection, how much foreign exchange I'm going to get after 2 months or 3 months.
Okay, Vipinji, the past performance regulation was changed in September 2020, April 2022. So nowadays, there is nothing called the concept of past performance. It is now the concept is contractual exposure and anticipated exposure. So if you have an actual document and you can produce that document when you are booking a forward, that is called a contractual exposure. If you cannot provide a document, but you are booking on the basis of estimation, then it is called anticipated exposure. So the past performance regulation is not there anymore. It's completely changed.
Okay. Thank you. Thank you.
Welcome, sir. Welcome. Sir, any more questions?
Rama sir, you want to ask any question? Ram. Unmute.
No, I had the same question of packing credit, so it is answered.
Okay, sir. So, Chairman sir.
Yeah, thanks, Vinod bhai.
Yeah.
In fact, sorry for late joining to the webinar. I had the other meeting to be attended, and it was a great deliberation, good interaction. Thanks to Mr. Victor. And the most important point is Forex webinar, which was organized because we are looking for empowering our own custom brokers to have into different fields of freight forwarding, shipping, or even the containers business. Now, while having all this, we should also have the knowledge of foreign exchange, how it works. Even in our regular day-to-day business, which we are doing the freight payments, how the exchange rate plays very important role in the whole of the system. Because today there are entities which are only making money or only doing business on this exchange rate. So itself is becoming a business. So while we are in the same business, we should take cognizance of the same, how we can add on to our business profits by reducing such cost or by making a good losses about this foreign exchange. This was a good webinar we thought we will organize, and we'll take it forward with the members with more and more inputs, and we'll have it addressed. Thanks, Mr. Victor, for having this webinar. We look forward for working together jointly, and also in future, whatever members have the concerns, we will surely bring it to interaction, and in future we'll organize this webinar. Thanks to you, and thanks to Chairman Vijay for initiating, and the office bearers for joining, and all the members over here who have been very important. I don't mind even little people on the webinar, but those are the interested and the known people whom we require on the real part. Thanks a lot.
Thank you, sir. Thank you. The pleasure is mine. I hope I was able to add some value and make you everyone think and stimulate your ideas. Thank you so much. It's a pleasure. If there are any more questions, I'll be more than happy. Or else, if, as Sudhir sir said, we should have a separate session on the questions. We can schedule that as well.
Chairman sir, before we started this session, I had some informal discussion with Ritesh ji on the issue of exchange rate being charged by the shipping line. So what is happening, like different shipping lines, depending upon their banks, they are taking into consideration TT buying and TT selling rate as a reference point for billing to us. And in some cases, these exchange rates, as you are aware, is more than by 3 rupees, 4 rupees. Like, so what he suggested is that rather than having a bank specific TT buying, TT selling, TT buying, TT selling is not the reference rate altogether, number one. Number two, if somebody has to take a reference rate, it has to be a RBI reference rate. And just to, cover it with any risk of day-to-day fluctuation, a premium can be added onto it. And that way a representation can be given, which we earlier tried, but I think we can try with whatever information we have received, or we can discuss it on a different platform with Ritesh ji and take a meaningful representation and give it to maybe Ministry of Shipping.
No, great. We'll have a representation to RBI only and IFSC, because it's an institute which regulates all these banking rates also with the shipping lines also. And if they make out of that profit, it has to be offered for even profit tax also, which is not being offered in present. So we'll have a great representation on this Forex, which may be called as a bank rate or the card rate, which the RBI deals with. On basis of that, we will do some studies and give some cases to them to study. And basis of that, we'll do the representation. Yeah, thanks for this.
Vinodji, over to you.
Yeah, okay. Thank you, Chairman sir, Sudhir ji and Dushyant ji for setting the tone at initial level only. And thanks our advisor Rama sir and Shantanu Badkam were there, Vijay sir was there. And thanks our office bearer. Victor, special thanks to you, sir. And definitely we came to know a lot of terminology, what is cash, term, and spot and forward, which is T+2 and 3 and above. And it's a great suggestion for all of us members to take away that whenever you deal with the foreign exchange with the banks, you ask 2 questions or 3 questions. What is your commission?
Yes.
What is the spot rate or what is cash rate?
Right.
We come to know that, okay, they are charging 2%, 3%. We can reduce to 0.5% or 1%.
Yes.
Save a lot of money. And it's a great advice for all of our exporters to go for export packaging in Indian rupees.
Yes.
Which can save a cost from 6.5% to 3%, maybe 4%.
Yes.
And
Yes.
it is always a misconception that this exporter should hedge in foreign currency or importer should not hedge. Misconception was also cleared by you, sir. And finally, thanks for offering the app which can give us a real time while exchange dealing in the transacting in the foreign exchange. And definitely our members, thanks to our members also, there is a lot of takeaway. Even Sudhir Bhai has already told that because of last 15 days, we are having a lot of ice gate issues and many members, they could not attend. But once we share this PPT, definitely we have to organize one more session for all of our members. And thanks for offering this app and your valuable time, sir. Thank you very much. Thank you very much. Thank you all, sir.
Thank you, Vinodji. Thank you so much. Thank you for the kind words. Thank you.
Thank you. Thank you, sir.